Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 28th of April. All right, now as we come through the first full day of the markets, the things have pretty much settled down now. There was a bit of news sort of out end of last week and over the weekend about a lot of the US states sort of opening up and some not opening up. Well, you got Georgia down here throwing some food on the menus, etc., or food on the tables. That's interesting. So the other news sort of really out was well, Japan's jobless rate rises to 2.5% in March. That's pretty big for them because pretty much everyone's got a job until they sort of pass away. So that's a bit of a move. And the BOJ has expanded their stimulus package. Now, they don't have a lot of room to move anyway. They've been in this conundrum for 30 years. So it's not like it's going to change the spectrum of what's happening in Japan. They're just trying to manage, this small increase in unemployment, I'd say, and the sentiment of the people. So that's where we are with the sort of key things that are coming out. Now, where the momentum is fading, and you have a look here, dollar dips as plans to reopen economies boost risk sentiment. Well, that was probably yesterday. So any of the news you read on this page is old news. Now, if I bring you back across to, say like the dollar page, for example, right, you're looking at, get my drawing tool on, looking at the major pairs right now as we come out of that North American session, all the dollar pairs going up and all the other pairs going down. Okay, that's a pretty good sign for pretty normal market conditions. But what that article was talking about, dollar dips as plans to reopen economies, okay, takes off the risk sentiment. That US safe haven trade, which has been in play for the last, say, month or weeks, has slowly drifted off. But as you can see, it's sort of faded here, just around 99.80, just under 100 in the dollar index itself, and it's slowly coming back. So once again, if you read the news that I just showed you, the dollar dips, well, it's actually coming back, right? So just bear that in mind. Now, equity markets to start the week, nice and tepid, up 1.5%. The Dow Jones, that's sort of a good sign that there's a bit of positive sentiment out there, even though we're starting to unwind, or there's a bit of fractious tension regarding the US states, who is coming out of lockdown and who isn't. But I know that beaches are opening up and restaurants and a few other things. So this could happen very quickly, right? Don't underestimate it. I know they've got timelines, but you know what? People are pretty much informed now on what this virus does and who it affects. So I wouldn't be surprised to see everything back in full motion by May or middle of May, which is only weeks away. So the dollar index slowly dipping and coming back, right? So what does that do for us on the charts? Well, if I get that up for you, move that image. Now what we had is, and I was looking at this yesterday, and we had this in the earlier workshop meeting. So we're looking for a trade here. So as the lockdowns unwind, the safe haven trade, which is the US dollar default safe haven, unwind. So they start to sell dollars. Now, we saw this across the board. Sterling went early, as did sort of Kiwi. But check out the momentum here, right? So this is the hardest thing about geopolitical events, is gauging the momentum. Now, like on another day, this could have all continued to go, but we don't have the news yet. We've got the initial news of potential lockdown rollouts or rollbacks, and that saw these currencies pop, but we didn't really see a really good flow-on effect, and that's where you really got to start adjusting your trade plan. Now, I'm still long Aussie, still in that trade. I got caught. I didn't get caught. I bought euro as it broke higher, and unfortunately, it got up to 60, stalls, and then retreats back down to 20. So really fading momentum is one thing that you have to be sort of abreast of. And the same thing happened across Kiwi. Not so much sterling. It rallied another 100 points. And that's where the action was there. Where's my pen again? Just coming down here to dollar CAD, right? So oil's still hemorrhaging, right? And dollar CAD, I think the market has to be long dollars against the CAD, right? And what we're seeing is here, I think, same as the other currencies, a bit of a short-term stop loss run to the downside. We should probably see that come back. But with that movement, you want to be a little bit cautious. You're probably looking to get long back above 141. To me, makes a bit of sense. And with that stimulus package, okay, there's been a bit of buying of yen. Hasn't gone a long way, but you know what? For the time being, it still looks like a bit of a sell on rallies. So what does that do for us with the major pairs? Now, the easiest thing to do is bring you back to the our daily trade routine here, give you a bit of a run through how we see things playing out. Now, market conditions, the pairs are trading technically very well. What we're missing is the key market driver where momentum comes into the market and stays in the market. These geopolitical news updates are not, it's hard to gauge the momentum when it kicks on and when it's going to diminish. So it's a bit of a tough one, but we do have pretty good technical setups. So let me just scroll down here now. Still, to me, the two main active pairs, well, the Aussie's broken up on the hourly and daily timeframes. That's why I'm still sitting long. But you know what? Break back down below sort of 64, well, 32 is like the key level, but back below 20, it's all over. Okay, it's just going to drift back into the range. And oil, I tell you what, it was teasing this 1875 resistance level, didn't actually get above it, right? So to me, oil is still a sell on rallies until this lockdown is completely wound back. And that's the pressure on oil is going to continue to build over the coming weeks. Now, for me, the best technical setup, or the best setup I can see out there in the moment is on sterling, and it's on the daily chart, right? So have a look. If this thing breaks through 124.40, we should see a decent move to the top side. It's got the strongest upside momentum at the moment. And it looks like the best sort of setup for me out of all the pairs. Sterling, obviously buy break, dollar yen, still a rally, but most of the other pairs, we're waiting to work out where this US dollar momentum is. So they're just sort of chopping about in, you know, a couple of false breaks, bit of mid-range stuff. It's nothing to really get excited about. So we're still waiting for the news to sort of roll out. Now, just keep an eye on the macroeconomic data. As we do roll out of the lockdown situation, this is where this data is going to come into play. So later today, we've got the US CB consumer confidence, well worth having a look at, see if that has any influence on the equity markets. And then hopefully we can piece together, you know, what's going through the markets there. All right, now just bring you back to, just before I finish, have a look at that sort of the general risk on, risk off profile of what's going through the market. You've got, you know, as you'll see, pretty steady moves across the board. The yen pairs probably, you know, well, they're still slightly down. We have just gone through the, you know, the roll where all the, you know, 5 p.m. New York, where all the data resets. Interesting, 1.5% up, obviously, the US equities. We want to see that roll into the Japanese equities. And at the moment, with following yesterday's BOJ stimulus, they're not really playing the game with the US equity market. So maybe we're going to get to a stage where each market starts to move independently. We've been relying on the US market, the US equity market, bond market for global trend on the dollar. We may start to see individual economies start to outperform each other as we go forward. But at the moment, all we can do is, you know, sit back and let the data tell us where the action is. To me, it's still a dollar, but we don't have that consistent momentum. So that's where it becomes a little bit tricky. Overall, is the dollar going to go up or down? You know what? We need more information. And we need to see how, you know, some of these US cities, if they are coming out and rolling back the lockdowns, if there's a quick spike in the coronavirus cases, you know, the media's going to be all over that. That'll go back to a dollar buying situation and probably more lockdowns. If the rollbacks, there's no increase, well, then you're going to see the US dollar fall, and that's when we're probably going to see the currencies rally. When's that going to happen? Well, that's where you have to keep an eye on the news. And you know what? I don't encourage anyone to sit in front of the screens and watch the news, right? It is going to be traumatic. If you're looking for general news, right, as I said before, when you're looking at these articles here, okay, this is on my FX Market Insight page. This is old news, right? By the time they write these articles, it's 4 or 5 hours later, if not longer. And that's where we are. So if you are looking for news, you need to have the current news, the breaking news, right? So if I go to say the US dollar page, just get that up. Whoop, where are we? No, wrong page. So what you'll find is you'll have access to, if you're using Metastock, you'll have access to specific news that you can get up. And this is the sort of breaking news. You want headlines. You want to know exactly what it is. A lot of these ones will not have the full story straight away, but it will tell you sort of what's going on. Any comments by Trump, for instance, or any sort of key data that is changing out there. This is where you want to see where it is. And the good thing about it, if you have these news services up, okay, see here, this is update 1 or update 2, update 3. You're looking for the fresh news where it's just not an update, it's a news item, and that's where we go. So looking here, you've got some like Trump saying he's doing a serious investigation of China actions in response to the coronavirus outbreak, etc. Does that really impact? Well, no, but maybe it leads to a bit of a fractious relationship back with China. I know a few countries are trying, in particular Australia, are trying to do a some sort of study on why this all happened and try and work out what's going on. And China are kicking back already. So anyway, that's what we've got to look for. The news isn't clear. The macro fundamentals, economic fundamentals aren't sort of driving things just at the moment. So just be aware, adjust your trade plans to capture the small bits of profit that you can get without sort of coming into a full scalping sort of mode, because that's problematic. It all comes down to having a high percentage winning ratio. If you can maintain that, well, then keep tapping cash into your account. As soon as that turns, you need to stop trading because you're out of sync with the market. All right, guys, have a good one, and all the very best for today. Cheerio.